Morning, folks. This is Friday morning, the 29th of November. We're going to take a look at the stock indices on a longer term picture. We'll start with the German DAX. And as you can see, we're completing this butterfly pattern right in this area. There's also a 1, 2, 3, 4, 5 point expanding reverse wave coming in. What I've done over here is just this price zone. I've just taken the highest high on a weekly bar, and then I've taken the low off the highest closing week. The highest closing week occurred in 2017. So the low off the highest closing week, and then the high that occurred at the beginning of January. That's the spike high, and that's created this zone. And then all I've done is just measured some expansion ratios from various swings, and these are some of the expansion ratios clustering within this zone. Now the ABCD on this, if you measure from the low we made last December, you can see that comes in, if the CD leg equals AB, that comes in at the top of the range. So whether we can just eke a little bit higher on this, or whether the top's in, we'll have to wait and see. But I think we're getting close to a correction. So let's have a look. So that's the DAX. If we look at the FTSE, now the FTSE is a little bit messy, really. We sort of made this 3 drives to a top, started expanding, and you can see now we're contracting. Bit of a messy chart, but of course there's a lot going on in the FTSE. There's a potential Gartley up into the 786. That'll be up about another 200 points from where we are now, if it can get there. So we'll have to wait and see on that one, or whether it's if the high's already in. We've got the A, B, C, D to the downside, down test this 786 area. We'll be interested to see which way can break out of this contracting formation. One we don't look at very often, that's the CAC 40. We'll have a look at the French CAC 40. Again, we've got another 3 drives to a top, another expanding reverse wave, 1.27. There's also a larger 3 dives to a top pattern from the high we made in 2015. Drive 1, drive 2, drive 3. Again, these are major reversal patterns, folks. If we look at the Hang Seng, this is probably the weakest of all the markets. There's a lot of things going off over there. Spare a thought for those poor folks in Hong Kong. So again, we've got this contracting wave. There's a 135 pattern. There's also a 135 to the downside. So it's looking, if it breaks to the downside, you've got the A, B, C, D off that one, and then there's the larger one which is drawn in, as you can see. So that'd take you down to this 786 and 1.618, somewhere in this area. So that's the Hang Seng. If we look at the Nikkei 225, this has completed a beautiful Gartley pattern. A, B, C, D off the high we made in October time. So we rallied a little Gartley pattern, then we've completed this A, B, C, D. So it's interesting to see whether we've had 1, 2, 3, 4 weeks in this area. So, but that said, if this starts to move lower, there's a potential A, B, C, D. It's going to take us down about 5,000 points from where we are now, right now, if that was to unfold. Of course, if it's still bullish, then you've got the A, B, C, D to the upside. So interesting to keep an eye on that one. If we go over and have a look at the US markets now, we'll start with the S&Ps. Another butterfly, 1.618, 3 drives to a top. This 3145, 3150 area. Again, your 5-point expanding reverse wave. A lot of things telling us that this ought to, if this may well go higher, but it could probably correct first again. So worth keeping an eye on it. The Dow, very similar picture. Butterfly, 3 drives. expanding reverse wave. If you notice on the expanding reverse wave, we expanded to the 1.414 on the way down. Then it's rallied, as you can see, into the high, and now all we've done is expand to the 1.414, the upside, the same swing. So again, looking overstretched. If it's going to go higher, I'll be surprised if we don't correct first. And then if we have a look at the Nasdaq, we can see on the Nasdaq, would you believe, butterfly, 3 drives, and expanding reverse wave. So again, the ratios, 1.27s, your 1.414s, your 1.618, everything's telling us that we should be keeping a close eye on these equity markets. The catalyst for the sell-off in 2007, if you cast your mind back, were the junk bonds, the high-yielding bonds. Now, I haven't got a chart of them. Larry might have one, but they've already started to, they've made an ABCD to the downside. So there's actually a lower low already established in that market, and that was the catalyst to sell off last time. So it's worth keeping an eye on that. So that's what I'm seeing in the stock index longer term on the weekly chart. So enjoy your weekend and take care. Good luck with your trading.